Here we go. Guys, Blockchain Crusader here. Like always, crusade through these blockchains. I appreciate every single one of you guys in here smashing those likes, hitting that subscribe. It is January 10th, Saturday, and people want to know, where is crypto gonna go? So we're going to be covering here Bitcoin. Yesterday, we had some very good news coming out for the crypto space overall. The Trump tariff decision was delayed, postponed, whatever you want to call it. Point is, it didn't happen yesterday, but that led to a very short-term rally for Bitcoin and then quickly a major pullback. Does this mean that Bitcoin is cooked? I personally don't believe so. I personally believe that even though that decision didn't come out and there was a short-term rally, we didn't see the massive blast off to 96,000 like everybody wants to see. The move to 96,000 is still on the table, guys. It's still on the table, and I'm going to be explaining to you guys why that is. So I hope all of you guys are coming in right now. Make sure you guys are tapping those likes, hitting the subscribe, sharing out the live stream with everyone that you know, because I want to make sure you guys don't miss out. Overall, on the day, altcoins are down 2 to 3%, 5% here and there. On the week, grand majority are green all around, right? Green all around. Zcash still in a pullback here of 23.9%, currently sitting at 383. 383, headed towards that target of 296, guys. Headed towards that target of 296. On the month, we still got even more green in the crypto markets. So let's go take a look at here by looking at the good old Bitcoin, right? Oops, that's the Bitcoin dominance. So yesterday we saw this major move to the upside, right? From around 89,600. We had this massive blast off when the delay of the tariff news came out, and we hit the previous day high of 91,500, and then we hit the previous week high as well. Why is this incorrect right now? Hold on. Hold up. Wait a second. There we go. Now it loaded in. Here we go. So we wrote it up to the previous day high and previous week high here around 91.7, got rejected, signaling a reversal, and just like that, we pulled back towards $90,000, and since then, we have been going sideways. Like I've told you guys before, meanwhile, Bitcoin stays above this $89,158, Bitcoin is still bullish, guys. Bitcoin is still bullish. We're looking for higher up. Now, obviously, higher up means 94.6. 94.6 is where we're focusing on right now. This level right here. This is the level that on Monday we came up to. We swept it. We lost that area, and we started having a major pullback throughout the entire week. So once again, we shall see if we can reclaim 94.6. If we can reclaim 94.6, then we are to expect our push to the upside here. Let's zoom out to the daily. Let me turn off some of these wild indicators here. Make sure it's nice and steady for you guys, nice and clean overall. Let me turn off this other indicator. Boom, let's turn this one off. Bam. Let's turn this one off, and here we go. So we are in the midst of getting above 94,600. If we can get above this area here that we swept on Monday on the 1 hour, 4 hour, and even on the daily, we are looking for a push to 96 to 98,000 for the good old Bitcoins. The good old Bitcoins. Let's jump here into the chat and see what the people are saying. Appreciate everybody in here smashing those likes, tapping those likes, guys. Fill them out. Make sure you're sharing out the live stream with everybody you know. And let's roll through this chat here. It ain't gonna happen. What ain't gonna happen? My friends, be specific. What ain't gonna happen? Appreciate everybody in here. Guys, fill up those like meters over here on TikTok. Tap those likes. Fill them out. Let's go. Fill up those like meters. Let's go take a look at Ethereum. Well, actually, before we do that, let's take a look at Bitcoin dominance. Bitcoin dominance here still sitting at 59.12%. We need the good old Bitcoin dominance to start dropping below 58.49 to get a previous quarter low. Once we can do that, we will be looking for targets near 56.9 to 56.8 for Bitcoin to the downside. But meanwhile, Bitcoin's dominance stays above 59%. Definitely not going to be great for the altcoins. Obviously, with Bitcoin's price declining and the Bitcoin dominance increasing, it definitely puts a pause on the altcoins moving. But like I said, meanwhile, Bitcoin stays above 89,158. We are bullish. We're looking for higher once we can start getting above that 94.6 area for Bitcoin. Now, if we get rejected at 94.6 again for Bitcoin, you know, we got to be careful, and we're probably going to be looking at creating a little bit of a double top situation at the local area and start dropping down, most likely below that 89.1. And if Bitcoin drops below 89.1, then we will be looking for a drop down to $83,000 to start with, right? Just to start off the drop, the real good drop. Let's go take a look at Ethereum here. Let me turn off all these indicators. Turn off all this stuff off the charts. Jeez. This chart is a mess. Turn this off. Turn this off. Where's this regression trend? There we go. So ignoring all these little targets down here. Need to clean up this chart, but ignoring all these little cluster of targets between 31 to 2,900, Ethereum remains overall still in its yearly average, in its yearly range for 2025, still above its yearly 6-month and quarterly NPLC at 25.14. That is our big target to the downside for Ethereum. So if Bitcoin does head for that 83,000 or lower, if we do lose 89, right, I will be looking for Ethereum to go to 25 to about 22.49. Worst case scenario, unless it's a very bad pullback for Bitcoin and Bitcoin does not get a support bounce in the early 80s, maybe high 70s, then yeah, I would definitely expect lower. But overall, if Bitcoin has a major pullback, I will be expecting Ethereum targets to be between 25 to about 21.64. WP in the house. What's going on, brother? Appreciate everybody in there. Why is everything green behind you? Why not? Why is it not green? Why have they not dropped us to that level if it's headed that way? ARK, that is a great question. So if Bitcoin is headed towards 80K or lower, why haven't we dropped yet? I'm going to explain this to you guys perfectly here. Just give me a second. Let me zoom out. What better way to do it than to get everybody stuck in a bull trap and get the most people liquidated, right? So if we're going to drop to those levels, what makes the most sense is not when we were already down at 80,000, 82,000, and we were just chopping sideways for the whole entire month of December. That doesn't make the most sense, right? Because everybody was stocking up on shorts. And guess what? We pumped up to 95, to about 95, 94.7, and then we got all those shorts liquidated. Now we're back at 90,400. So you're saying, well, if we're going to drop down to, you know, the low levels, what's going to take us there? This right here, guys. If Bitcoin pumps up to this 96 to 98,000, it can even overextend a little bit towards that 100K area. But we start closing some macro levels like weeklies, monthlies, and even a quarterly below 98 to 96, and we get rejected off this zone right here, we will be getting smacked down, right? Because once we get to this level, 96, 98, maybe even top 100, everyone is going to be calling for, we're back, all-time highs are coming, massive bull rally, altcoins are rallying, everybody's FOMOing, what altcoin should I buy, buy, what is this altcoin price going to be, what is that altcoin price going to be, right? Bull market. But then if we get rejected at this 98 to 96 level, people are going to be FOMOing here at this local top, And this could be a massive rejection taking us down to, let's see, we've got some, no, that's not what I'm looking for. If we get rejected from that $98,000 to $96,000 area, I will be looking for Bitcoin to come back and retest these lows, right? We're at least going to take out the low from November of 80,000 and then look for this $73,000 area, right? Which is the low for April of 2025 was around 74.5. I expect a retest of this value area high of the 2024 yearly range, right? Value area high lines up at 73,700. If Bitcoin drops below 73,000, the yearly NPOC for 2024, which is still untapped, is 67,300. And then we have a larger target to the downside between 59 to 57 for Bitcoin to the downside. So that's the big target to the downside. How would they most likely do it? Would be this $96,000 to $98,000 price point. Get everybody super excited, get rejected, and drop lower. Now, if we break above 98,000 for Bitcoin, we have targets between 104.7 to 111,000. We obviously always got to keep an eye on it because even if we're rallying above 100, right, we could run up to 104, 111, create a lower high, and then start dropping lower. But I wouldn't be concerned about that lower high unless we start falling out of the 2025 yearly range, which the value area low is below 95. If that does occur, then I will be looking for that $70,000 to $67,000 price point again. But, you know, just because we create a lower high at 111 doesn't mean it's doom and gloom. We can chop sideways. We can invalidate that eventually, but that is something to be aware of. So, but before we get ahead of ourselves, the main critical area for Bitcoin to know if we're going higher or we're going to start going lower aggressively is this $96,000 to $98,000 price point. $96,000 to $98,000 price point. Everybody wants to take a look at, let's see, people are asking about XRP. We'll get to XRP in just a second. Isn't there massive shorts around the 122 to 124? Surely couldn't let them keep printing, no? Well, if there are a bunch of shorts around the 124, that just makes... Oh, you're saying that people were shorting when we got into the top? Dude, absolutely not. When we got to that top of 126, there is not a bunch of shorts up there. We were at 126, and then literally 2 days later, we crashed. We crashed down to 100,000 on that October 10 liquidation, right? So we hit 126 on October 6th, and literally 4 days later, on October 10th, we were getting liquidated left and right with that massive liquidation event on October 10th. Then we chopped sideways, and then we dropped throughout November and the rest of the year. So I would not say that there is a bunch of shorts up at 126. Nobody was shorting 126. Well, I'm not gonna say no one. I'm sure there was a few people out there, but I'm just saying there's no grand majority of people shorting from 126. Appreciate everybody in here smashing those likes, hitting that subscribe. Guys, if you want to start learning how to invest crypto, I'm not a financial advisor. I'm not here to do that. Open up a Coinbase account and start doing some research and start finding some assets you want to get involved with. There won't be a bull run until 1, Jerome Powell gets replaced, 2, the money printer comes on. I don't necessarily agree with that. Meanwhile, I do agree that both of those things will be technically bullish for crypto, right? Replacing Jerome Powell, kind of like how replacing Gary Gensler was, getting more aggressive interest rate cuts, and obviously turning the money printing back on will definitely be helpful. I wouldn't say that those are the only determining factors on whether we're going to have a bull run or not. When we look at the technical levels here, this is the critical technical level, right? Getting above this 96 to 98,000 and closing high time frame candles above it will give us an idea of whether we're going higher or not. And if Bitcoin does get above 98, even if we don't have a bull run like most people want to classify, meaning hitting massive new all-time highs for Bitcoin, getting above 98 and starting to push above 100 again is going to massively push the altcoins to the upside. How do you feel about Quant and Tau? We'll take a look at Quant and Tau in just a second here. Let's go take a look at the XRP chart. Everybody wants to talk about good old XRP. Let's go take a look at the XRP chart. Appreciate everybody in here smashing those likes, hitting that subscribe. So XRP here, let's zoom out into the daily. All right, since we hit our target of 241, not a surprise, we've been pulling back along with Bitcoin, obviously, and Bitcoin dominance increasing. So we've pulled back here towards our weekly open, and we've been hovering around this 209, close to this 205 area, trying to build support above $2. Very critical, right? XRP has had a lot of support here since October. Our longest period of time below $2 was in the month of December. The last 2 weeks, we had 2 weeks worth of candles all below $2, which, it was good and bad. Good because we started to build some support around the 177. Bad because it could have gotten ugly real quick. So meanwhile, we stay above $2 here for XRP. XRP should be okay to have another push to the upside, right? Trying to break out of this 6-month downtrend that it's in. It's going to all be hyper dependent on Bitcoin. Can Bitcoin push to 96, 98? Can Bitcoin break above those areas? Will Bitcoin dominance lower again as we rise up back into the 58th percentile and lower? If that is true, then yes, XRP has the potential to run for 281, which is the next big target for the 2025 yearly range of XRP. And then above 281, we need to get above 309 to really start making a move to the upside. Let's go take a look at Tensor Tau. But before we do that, guys, if you haven't already joined the Crypto Citadel, my private trading community, I definitely recommend you guys go and do so. You can get 50% off right now your first month with the code Citadel50. You get daily chart analysis, trade setups, my trading course, exclusive trading indicators. I do live trading sessions Monday through Thursday, 2 hours from 9 a.m. to 11 a.m. And obviously all my trade signals as well, and get all of that. So start getting involved if you haven't already. And on top of that, let's go to Tensor Tau. Where are you? Okay, I lost it. Let me go back over here. Boom. Tensor Tau chart. Zoom out to the daily. Let me turn off these indicators. All right. So Tensor Tau here is pushing at 280. Got a little rejection here at this $299 to $300 area. Very hypercritical area that we need to get above, right? Getting above $300 puts us back in the yearly range for 2025. So far, Tensor Tau has not been able to accomplish that. Once Tensor Tau can accomplish and hold above $300, then our targets are 316 to 391 with a goal pocket up at 422 within the 2025 yearly range for Tensor Tau. Those are the targets. But if we cannot get above 300 and we continue chopping sideways or heading lower, we will most likely be going back towards 247. Eddie Parker says, join the Citadel. Awesome community. Appreciate that, Eddie Parker. Appreciate it. Let's see here. Yeah, man, this week in the, let's go check out the Crypto Citadel. This week here in the Citadel, I need to update my P&L, but overall, we got some pretty nice winners here. 271, and then we got another, oh man, where's the other P&L post? We got another long that was like four something. Where'd it go? 271, and there was another one posted somewhere else. Maybe it was posted on a different channel. I got to update that. But yeah, we walked away with around, like $600 this week off like 3 trades or 4 trades that we took. Obviously, we took some small losses of $40 and so, but overall still was able to walk away with like about 400 to $600 this week in profit. Let's see here. Check Cactus. Let's go take a look at Cactus. Let's see how Cactus is doing. Cactus, if you guys don't already know, it's one of the main dexes in Sui down 2.7% this month, only up 2% this week, and 2.7% on the day, down 91.2% on the year. Very tiny market cap here of 23 million. Massive decline. Remember Cactus had a massive blast off from like 23 million to like over 60 to 70 million market cap earlier last year. Haven't kept up to this in a long time. Let's go take a look at the chart for Cactus. Let's go take a look here. November 2024. Okay. So let's get all of 2025 here. Come on. All right. Let's get the yearly. All right, we're looking at the chart here for Cactus. Give me a second while I do this, guys. Make sure you guys are tapping those likes, filling up those like meters, sharing out the live if you haven't already. As I finish up this chart here. Let's get the yearly MPLC. Appreciate everybody tapping those likes, guys. Don't be greedy with the likes. They're free, guys. They don't cost you anything. They're free. Don't be greedy with the likes, my friends. Don't be greedy with the likes. That was 6-month average here. And let's get a quarterly as well. Why not? We're already here. We're already here. All right, almost done. Make sure you guys are still smashing those likes. Let's get it. We're going to cover Cactus here in just a second. Let me just get one last little target right here. And boom. All right. So Cactus right now is sitting at 0.027. We are below the yearly range for 2025 for Cactus. We're right at the lows from the liquidation event on October 10th. And our targets to the upside, right? We're pretty much at bare bottoms. Either this thing's going to go to zero or it's going to have a rally kind of scenario. Right, so basically here for good old Cactus, if we're going to have a rally, targets to the upside here, first target is at 0.041. Second target is 0.062, which is the 6-month untapped average. Then we've got the value area low for 2025. We need to get above 0.07 to re-enter the 2025 yearly range. If we do, our targets are between 0.09 to the massive target of the upside of 15 cents. 15 cents basically. And if we measure out this move here, right, measuring out this move from where we are today to this first target, that is a 51% move all the way up to 4 cents. All the way to 6 cents is a 128% move. Getting into the 2025 yearly range is a 165% move to the upside. Getting to our main target, the yearly NPLC, is a 232% move. And then if things get crazy and they run for that 15-cent target, that is a 459% move to the upside for Cactus. So very high risk asset here. Very low market cap of, like I said, it's like 23 million. Yeah, 23 million market app. This thing can absolutely go to zero without in a blink of an eye, or it's going to have a little bit of a rally here to the upside. It's one or the other. So make sure you guys are understanding that when getting into this asset. If you are getting into this asset, it is extremely, extremely high risk. This has been moving in the last few days. I invested 200 and up 500 in 3 days. Congratulations, man. I don't know anything about that, but if you're making money, I'm happy for you. What's going on, Dylan? What's going on? Appreciate everybody here smashing those likes, hitting that subscribe. Let's go check out, make sure I'm not missing anybody in the chat. Somebody wants to take a look at Sui. Let's go take a look at Sui. We were just looking at cactus or whatever the heck they call it. Cetus. Sui is sitting at $1.80, right? Still within its 6-month downtrend. Started to get a little bit of resistance as they approach the 382 fib around $2 and close to the upper band of the uptrend of the downtrend. Sui needs to break 213 to 228 to get back into the yearly range of 2025. Targets within that range are 250 to the main target around 345 for Sui to the upside. Those are the main targets to the upside. We do have a gold pocket at 308 that we need to be careful with, that we don't get a rejection from. But meanwhile, if we can enter the 2025 yearly range above 228, 227 and sustain ourselves, close high time frame candles above there, we have a good chance of running for that 348. Appreciate everybody in here smashing those likes, hitting that subscribe. Yes, guys, the bubbles are green because it's on the weekly, bro. It's on the weekly. Everybody stop freaking out about the bubbles. Jeez Louise. Crypto will be flat to negative in 2026. That is a interesting take at best, because it's very easy to say that when Bitcoin has dropped from 126 down, right? Oh, it's going to be flat. Oh, it's going to be negative. But if we reclaim that 98,000, everybody's going to get caught off guard. Everyone's going to get caught off guard, because it's easy to say it's going to go lower, lower, lower when it's been going low. But then it's hard to be able to catch that shift in the market. Make the bubbles yearly. I can't. It's a screenshot, guys. I can't actively change it. Everybody relax about the bubbles, bro. Yeah. Oh, yeah. The bubbles are red on the yearly. Surprise, surprise. Why is anybody surprised? The altcoins have been getting crushed all 2025. It's been a massive bear market for altcoins. Altcoins are down over 50 to 80 to 90% on the yearly. Appreciate everybody in here smashing those likes, hitting that subscribe, guys. Let's go see here. There is a piece of news here. Renowned CEO Raoul Pal, an injection of $8 trillion for Bitcoin bull injection could be coming. I'm interested in seeing what the heck they're talking about here. Speaking to Scott Merker on Wolf of All Streets, Real Vision CEO Raoul Pal made a statement that will excite cryptocurrency investors. What a surprise. All they know how to talk about is excitement. They don't know how to talk about the downside. According to Powell, the price fluctuations and liquidity shortages in 2025 are actually laying the groundwork for a major bull market in 2026. Raoul Powell argued that 90% of the market movements are determined by liquidity rather than narratives or technological advancements. Absolutely. Technological advancements don't move the price. Chainlink is a prime example of that. Powell states that approximately 7 to 8 trillion in new liquidity needs to be created in the next 12 months to be able to pay interest on global debt. Powell stated that the Trump administration in the U.S. would take every step to stimulate the economy to win the midterm elections, adding that fiscal expansion was inevitable. He argued that the new regulations, technical changes like SLR, would allow banks to buy more treasury bonds, bypassing the Fed's interest rate policies and providing a direct cash inflow into the system. He said governments will continue to devalue their currencies to roll over their debt, which is the biggest driver for assets with limited supply like Bitcoin. That statement right there, I absolutely 100% agree with. Every single government will always choose to continue to devalue their currencies because people don't understand the debasement of currencies. They see a dollar bill and they say, well, a dollar is a dollar. But no, a dollar is not a dollar. One does not equal one, right? $1 does not equal one. So people don't understand that the currencies are being debased. They don't see it. They have short-term memory. They get very quickly adjusted to high inflation rates, right? To the higher price of cost of living, groceries, right? They see gas coming down. They're like, oh, the economy is doing great. Yes, it's great that we're getting more oil and gas is coming down, but food is still extremely, extremely expensive. The housing crisis of affordability is still going through the roof. Yes, Trump announced a $200 billion bond buy or whatever it was called, but that's only realistically gonna reduce the interest rates on your house or your overall monthly payment on a new house by maybe $50 to $40 realistically at most. So is the housing market going to become more affordable because they inject $200 billion into the mortgages, into the bonds? No. Is it ever going to become more affordable? No, because the debasement of currencies are going to continue happening. So until they don't roll out the 50-year mortgage, right, that's when housing is going to become affordable again, because that's when the payment, the month-to-month payment, will go down, because it's going to be based on 50 years instead of 30 years, right? It's the same thing that they do at the car dealership. You go to the car dealership, they make you find the car of your dreams, and when you find the car of your dreams, they tell you, let's make a deal. What is your budget? What is your monthly payment that you would feel comfortable with, and we'll make it happen for you. What does that mean? That doesn't mean that they're going to make the car cheaper. That doesn't mean you're getting a great deal on the car. No. They're just saying, well, we can extend out how long this loan is for, the interest rate on the loan, and we can adjust your monthly payment. The car is still going to cost you the same amount. It's just we're going to adjust your payment. Same thing with the house. But that $80,000 car or $50,000 car that you're buying, or that $300,000 to $500,000 house that you're buying, when they give you that 50-year mortgage, or they give you that 6 to 8 year car loan, right? You're going to be paying interest for a longer amount of time. So meaning you're going to pay off the car at a way slower rate, meaning if the car costs you 50 grand, but you're paying it for 8 years, you will most likely be paying 20 grand on top of whatever you paid for the car in interest. Same thing with the house, right? The house for 30-year mortgage, you're paying a bunch of money monthly that we cannot afford, right? $3,000 and up in most cases. Then they give you a 50-year mortgage. What does the 50-year mortgage do? It makes your month-to-month affordable. Yeah, back down to that $1,500 price point, baby. I can afford that. Yes, but now that house that you're buying for $500,000 or $300,000, you're going to pay probably close to $1 million of interest on top of it, right? So whatever the house was worth, plus almost another $1 million on top of it. More than double the price of the house in interest payments to the banks. At the end of the day, the only people that win are the banks. And this is all happening because your currency is being debased and devalued every single day, because it's the only way the government doesn't crash. The only way the governments do not crash, go to zero, and shut down tomorrow is by rolling over their debts, because they cannot pay the debt. They cannot pay the interest. They cannot afford it because they don't got money. And their money that they do have is being devalued every single day. So their only plan is to continue kicking the can down the road until the Great Depression 2.0 occurs. And then it's a hard reset for everybody. All markets crash, the everything bubble bursts, and everybody gets crushed. Then we'll be like, oh, okay, we're resetting the debt. Everybody defaulted. Nobody could pay their debts. China, Russia, America, the European Unions, everybody got crushed. Everybody's out of a job. AI infrastructure is coming in. Robotics infrastructure is coming in. Automation is coming in. Everybody's getting replaced. All these companies have just reduced their overhead. And now everybody's in Great Depression 2.0, and then everything can be reset. And every politician out there is hoping that they're not the ones in charge when that occurs. But it's coming. The day is coming. So what does that mean? That means that the only way to prepare yourselves is to accumulate assets, right? Because the debasement of currency is going to continue occurring. And the early adopters onto a new currency, onto a new system, onto a new level of hard money are the only people that get to survive, these fluctuations in hard resets, right? Like JP Morgan, when they were around for the first Great Depression, did they go bankrupt? No. Why? Because they had all the assets. They were running the show. They were the ones bailing everybody out, right? Along with all the other big players of that time period, right? It wasn't JP Morgan alone, but it was all the big players of that time. They held all the assets. They held the grand majority of all the wealth in the United States, and they were able to provide liquidity and get everything reset into their favor. And the same thing is going to happen sometime in probably the next 10 years. We're going to have a hard reset. We're going to have a Great Depression 2.0, and everything's going to get reset. And the people that own assets are the only people that are going to make it through, right? Whether that's a house, right? If it's a house, it better not be the only house you're living in. You better have multiple properties to be able to sell some of those properties, take in some fluctuations, have some liquidity, right? Because if not, you're not going to be able to get a loan off the bank, right? Use it as collateral to get liquidity from the banks. Nothing. If you don't have Bitcoin, a crypto portfolio, maybe a stock portfolio, you're not going to be able to have anything to get leverage against. But like I said, everything is going to pop at some point. So you're going to have to take profits at some point before that major crash occurs, right? Because if you don't, everything's going to drop down to near zero levels, and you're most likely going to get crushed, because all we're seeing is stock market all-time high, gold all-time high, silver all-time high, cryptocurrencies all-time high, housing, real estate all-time highs, higher and higher and higher and higher. Everything goes higher. Everybody's the world's greatest investor. They just put money in the market and it just goes higher. They put money in the market and it goes higher. They put money in the market and it goes higher. And guess what everybody thought back in 1925? Same thing. I put money in the market, it goes higher. I put money in the market, it goes higher. Until it doesn't. Until it doesn't. So everybody needs to prepare themselves. Are you saying Depression 2.0 is coming and keep your cash? I'm not saying keep your cash right now. You need to prepare before the Great Depression by accumulating assets so that your wealth can grow. So your wealth can grow before the next Great Depression. At that point, you're going to have to assess when that Great Depression is coming. You're going to have to keep some cash on hand. You will need to cash out before the everything bubble pops, right? Because that's when all assets, everything gets crushed, and you will have to accumulate some cash for the hard reset, right? Because at the end of the day, cash will still be king, because the government is not going to give away its fiat currency powers. They're not going to be like, oh, we messed up like they did in 1929. Yeah, we're not going to use fiat anymore. They're going to continue using fiat. Fiat is the only power that the governments have. So 100% will continue to use fiat. Now, fiat will look a little bit different. It'll probably be based in stable coins, right? On the blockchain, all completely digital. It isn't really going to be cash, right? That we're having physical cash dollars in our hands anymore. So you will have to cash out at some point. I'm not saying to get rid of all your assets, but keep some assets. Always good to have some assets in the long term, but you're going to need cash to buy back assets at dirt cheap, the cheapest you've ever seen, right? The people that were buying assets in the Great Depression of 1929, those were the families. Those were the people that were able to take on family generational wealth, right? Because They were buying everything. They were buying real estate. They were buying stock markets. They were buying companies. They were buying everything because they had cash. And those were the people that were able to set themselves up to then be able to grow a massive portfolio of generational wealth that they can borrow against for many decades and generations after them. That's the only way it happens. But there will be a bubble. So you're going to have to cash out. So what are the signs other than everything goes higher highs? Well, you should definitely be aware that the higher we go, the more careful you need to be, right? This is where reading charts and analyzing data is extremely important. If you're not reading charts, if you're not reading data, then you're not understanding where this top could be. And I'm not saying that I know where the top is going to be, but the higher we go, right, as Bitcoin breaks all-time highs, as the stock market continues to break all-time highs, as gold continues to break all-time highs, instead of FOMOing, instead of like, oh, I want to buy gold at $4,500 an ounce, or I want to buy silver at $100 because it might go to 200, right, which is great if you make money, but you better have a plan to aggressively take profits. But that's the thing. People are buying at these highs, at these local highs, without analysis or a game plan of when they're going to take profit. And as the price continues to increase, the FOMO continues to grow. And they're like, it's going to go higher. I'm not selling. This is going to go higher. I'm not selling. You already saw all the silver people coming out. Same exact thing that all the Bitcoiners and crypto holders do when we're at massive highs. You see all the videos. I'm buying more. I'm not selling. I'm buying more. I'm buying more. Great. You're setting yourself up to fail. Why? Because when silver pulls back for 10 to 20 years. 10 to 20 years before finding a bottom. That's the average, right? That's the range. 10 to 20 years. I'm not going to hold an asset that I bought at the top for 10 to 20 years to find a bottom. I'm not going to do that, right? Bitcoin's a little different. It's shorter time frame, right? Shorter time frame. You buy the top, you wait 2-3 years, you'll get back into break even and into profit. Everybody that holds Bitcoin for at least 4 years or longer is in profit right now. But am I interested in buying Bitcoin at 126 or 130 or 150? No. I don't buy highs. I don't FOMO at the highs. I buy when they're lows, right? So if Bitcoin crashes now in this year, like some people are saying, we're going to go down lower in 2026. If Bitcoin crashes to 67, 57, which are targets that I'm looking for because I'm analyzing data, because I'm analyzing charts, which most of you don't. So most of you are going to see 67 or 57 and say, oh, no. I'm not buying. We're heading lower. I'm not buying. And maybe we do head lower. But this is where the people that analyze data are different from the people that just go based off FOMO and fear. If you're going based off FOMO and fear, the fear is endless. It will always go lower. You never want to put risk on. You only want to buy when things are pumping. And that's how you miss bottoms. That's how you buy tops. So if Bitcoin drops to 67 and lower, I'll start buying at 67. Strategically dollar cost averaging. I'm not putting 50% of my cash at 67 because we could drop lower to 57, even lower as 48,000, right? I will have to strategically dollar cost average at key levels that I am looking at in the charts, in the data, not off the top of my head because it's an arbitrary. I didn't pick 67 out of thin air. I didn't pick 48 out of thin air. No. Those are key levels on the charts that people are not reading. What percentage of a portfolio would you cash out? That's a great question. It really depends on everybody. It depends on your financial situation. So on October, if you were in the Crypto Citadel, right, in my private trading community, which is not just for traders, it's also for long-term holders. I highly recommend long-term holders being there because they get to analyze all this data with me and understand where the market is going. In October, after the major liquidation event that occurred for Bitcoin in the market overall, we had a little relief rally. Ethereum dropped all the way down to like 2,500 or whatever it was, and then it pumped back up to 4,000. I forget what the low for ETH was. I told my Crypto Citadel members, hey, we could be heading a lot lower here for Bitcoin and for Ethereum. So I am going to be taking X amount of money out of my portfolio. I'm cashing out. I am, de-risking at this price point. So at around 110 for Bitcoin, I sold some. At Ethereum was at 4,100. I sold some. Did I liquidate my entire position? No, I still have a Bitcoin position. I still have an Ethereum position. I still have many altcoin positions. But I did liquidate a decent amount of money to hedge against going lower. And I'm glad I did. Why? Because look at Bitcoin. Bitcoin dropped all the way down to 80. Ethereum dropped all the way back down to the low 2000s. So it was a fantastic move. I was able to take cash, pay off some debts, pay off some bills, right? Plan some vacations with my family, and use the money that I am investing. And being able to sit on cash while waiting for, if we do have a larger pullback, I now have cash sitting there that I am willing to deploy to reaccumulate at way lower levels. But if you never take profits, if you're not analyzing data, you will never know when to cash out. You will never know when to take profits. And you're always going to be buying tops, and always selling bottoms. What percentage of your cash portfolio would you cash out? It all depends on your risk portfolio. It all depends on how much risk your portfolio is, right? So my portfolio is very low risk compared to a lot of people. It's mainly Bitcoin and Ethereum, with maybe 25% in altcoins. But 75% of my portfolio is Bitcoin and Ethereum. Other people's are all altcoins, right? The grand majority, all altcoins, very high risk, low market cap stuff. You got to sell all of that. You got to liquidate 100% of that or 90% of that, right? That's just what I would do personally, not financial advice. Do you think we can enter into a bear market this way? We can definitely enter a bear market in 2026 if we get rejected off $98,000 for Bitcoin. And overall, if the 4-year cycle is still intact, the next halving event occurs in 2028. So you know that overall we have 4-year cycles, right? We have 3 years of pumping, 1 year bear market, and then rinse and repeat. 2024 and 2023 and 2024 were bull markets. They were pumping. 2025, we made all-time highs, but we closed 6% in the red. So it's actually a negative year, right? Maybe we get 2026 as the 4th year of pumping again, and then we go into a last extended cycle where we get, pumpage all the way from 2026 to 2028. The halving cycle begins again, and then continuation into the Great Depression 2.0. Very possible scenario. If we don't, right, the other scenario is 2026 continues to be bearish. So we break the 4-year cycle. We get 2 years of negative price action with 2 years of positive price action. The 4-year cycle, right, 2026 ends. And as we enter 2027 to 2028, where the halving cycle is, we start to potentially start recovering into the halving cycle like always, and, continue to the upside. But then the 4-year cycle is no longer 3 years up and 1 year down, right? It's technically broken in this cycle at 50%, 2 years up, 2 years down. So there's lots to still speculate on, but it all comes down to 98,000 for me. 98,000 will tell us if we're going into a larger bear market in 2026 or we are going to start entering a potential recovery for 2026. And that's why you should buy XRP now. Oh, yeah, that is the greatest time to buy XRP, a high-risk asset, altcoin, that if Bitcoin sneezes, it will catch a cold, right? What sense does that make? You guys understand that if Bitcoin's only dropped 36% from its high of 126 down to 80,000, and XRP has gone from $3.66 all the way down to $1.77, right? You guys do understand that, right? And along with that, if Bitcoin does drop lower, XRP will not be immune. XRP will melt along with Bitcoin, and we have targets all the way down to $1 for XRP. So do you think the depression occurred due to AI, robotics, or the markets being high? It's a combination of everything, Junior. So it's a combination of the markets hitting all-time highs. It is a combination of AI and robotic advancement that can, replace a large quantity of the workforce, right? Lots of office jobs, lots of paralegals, Just a lot of overall day jobs can get completely replaced. On top of markets being at all-time highs, on top of potential global conflict, right? Global conflict that we're seeing to warm up, as you guys hear some of the stuff that is happening right now. It's a warm-up, right? It's a warm-up. Everybody's positioning themselves to have the best advantage possible for when things get hot, they're ready, right? We're getting an increase in military spending from 1 trillion to 1.5 trillion. We are in the position right now of accumulating new territories to get more resources like oil and precious metals. That's not just for the AI data centers, guys. That's not just for the AI data centers. That is preparing ourselves and positioning ourselves for larger conflicts, right? So a combination of all of this coming in together into the same time frame as the 100-year anniversary of the Great Depression 2.0 is what makes me believe that we will potentially have a Great Depression 2.0. Most people claiming that crypto or Bitcoin is a scam, yet don't mention how fiat works. Oh, 100%, John Frost. That's a great point. Great point, right? Everyone that is literally calling crypto, aka Bitcoin, right? We're going to be focusing on Bitcoin, Ethereum, the large ones, not the meme coins, not the low market cap stuff, calling them scams. Please explain to me how fiat is not a scam. Please tell me. Please tell me why. Because the government backs it. Government force backs your fiat currency, so therefore it's not a scam. It's not backed by anything. It used to be backed by gold. It used to be actual money, where fiat currency was just a IOU of the government of your gold or your silver in the banks, right? Even the coins were made out of silver. It was like, hey, here's silver, here's real money, right? Here's gold, right? And here's my dollar. Give me my gold. I'll give you gold. You give me dollars, and I can walk around with that a lot easier. I don't have to be hauling the gold around, right? It's a lot more divisible, yada, yada, yada. And you can go redeem it for gold and silver at any point in time. 1971 came around, and fiat stopped being backed by gold and silver, or gold overall. Sorry, not silver, just gold. And there it goes. It's gone. It's over. It's just fugazi. It's just paper money. It's just monopoly money now. So I appreciate everybody in here. I appreciate everybody hanging out, asking the good questions. If you guys are not analyzing data, I urge all of you guys to join the Crypto Citadel, join my trading community. It is not just for day traders, guys. It is for long-term holders, for swing traders, for people that want to learn how to analyze data, read charts, and be able to understand where these markets are going. That is what the Crypto Citadel is for. There is tons of educational content in there that's exclusive to the Crypto Citadel alone. Obviously, you have access to me all day long, every day, Monday through Friday. I try to take the weekends off, but you look at me here on the weekends working. You can get 50% off your first month with the code Citadel50 to try it out, and then you can cancel anytime if you don't like it. For the people asking how to get access to it, if you're watching on TikTok, go on over to my profile and you will find the link and click the Crypto Citadel Get Access. If you're over on YouTube, go to the description of the video and you will find the link to the Crypto Citadel there. No, we don't accept. Unfortunately, I can't accept crypto with the membership. The way the membership is set up, it's not crypto. If you want to pay in crypto, you can try sending me a DM and we can talk offline. So John Frost, go find me on TikTok, Blockchain Crusader on TikTok, and or you can email me, send me an email, and we can discuss details there. But you can't do it directly through the membership. So if you want to play in crypto, you're going to have to DM me or send me an email. Elvis, let's see here, says, you don't answer me. You're talking about HBAR. Dude, I just saw your chat right now. Please. Let's all be patient here, guys. Let's go take a look at HBAR before Elvis loses his rocker. Let's go see here. HBAR is currently sitting at 11 cents, right? Almost 12 cents. We're slightly got rejected off the quarterly average of around 13 cents, which is an untapped average. We need to realistically get above 14.5 cents. Getting above 14.5 cents for HBAR puts us back in the 2025 yearly range with targets between 16 to 19 cents. Above 19, we have a target of 24 cents. Now, to the downside, if HBAR remains in its 6-month downtrend, Bitcoin continues to pull back, yada, 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 everything heads lower, you will be looking at 10 cents to around 0.07 cents to the downside for HBAR. John Frost, if you want to find my email, you will have to go to my YouTube page. I believe my email is there. If not, go to the link tree. Go to the link tree in my profile. You should be able to find it there. I was worried you wouldn't answer Elvis before Elvis left the room. Can you please check Fetch? Let's go take a look at Fetch. Fetch. All right, this is going to take a second here. Let me update this chart. I have not updated this in a long time. All right. Cool. Here we go. Yearly's up above. All right, guys. So for Fetch AI did close out the year sitting within the 2025 yearly range, right at the value area low of 19.5 cents. We have since then rallied to 28 cents for Fetch and have taken out the point of control of 26 cents for Fetch. Our next main target to the upside, if we're going to continue pushing up higher, is 40 cents. Above that, we have a macro target at 65 to 73 cents, which lines up also with the value area high sitting at 70. So between 65 to 73, expect a lot of resistance. If for whatever miracle Fetch AI can get above 73 cents, our next target will be 89. And above that, we have $1.21 to $1.31. Wouldn't get my hopes up, but those are the targets for Fetch AI. Oh, man, where the heck did chat go? Guys, I appreciate every single one of you guys in here. Appreciate all of you guys hanging out. Appreciate all of you guys wanting to join the Crypto Citadel. I hope to see all of you guys in there. Everybody that's not analyzing data, that is not leveling up their game as a daily crypto investor, right? If you want to be an investor, whether it's in crypto, stocks, in general, in silver, gold, you need to analyze data. If you're not analyzing data, guys, if you're not analyzing data and reading charts, you are just gambling. You're just being a degen. And we all know that when you're a gambler and a degen, the house always wins, guys. The only way to extract capital out of these markets is by being able to identify market structure, market trend, support and resistance to be able to de-risk yourself and take profits off the table like I did in October. If not, you will be left holding the bag forever. Now, if you want to start learning, make sure you join the Crypto Citadel. 50% off with the code Citadel50. Like always, guys, I'm Blockchain Crusader, crusading through these blockchains, and I'll see you in the Crypto Citadel. See ya.